think there's a lot of opportunity right now in the gold space with what the market's done in the last few weeks with the war in Iran. If anything, it's made the investment case even more compelling. Don't be a scared rabbit and just hold firm.
Dan Myerson, really appreciate you taking the time. I know this has been a big week for you. The votes are in and the deal's coming together between Foran and Eldorado. So thanks for sitting down with me today.
No worries, mate. Thank you so much for having me. It's a privilege to be on the show.
Well, before we get into everything happening right now, and there's a lot going on in your world, Dan, I want to go back a bit because when people see you today, they see the CEO, they see the deal maker, but there's a whole story behind that. So take me back. How did this all start for you?
Yeah, no, no, that's very kind words. It all really started. I worked at Morgan Stanley for a little bit, probably just over a year and a half or so. But I was in their banking investment banking team. I was always desperate to get into trading. And at that point in time, it was still just post GFC. There weren't that many jobs going. But I'd heard about this company called Glencore. It was still private at the time, and I met someone just by chance who worked there. And he, I was chewing his ear off for the whole evening, asking him a million questions. And at the end of the evening, he said, "You sound pretty interested in this. Do you want me to arrange an interview?" And I said, "Oh my gosh, please!" And and then I was he came through and arranged an interview, and I joined Glencore, and that was it for me. I mean, I was just in love with everything related to commodities, and then when we did the Eldorado transaction, I was very lucky that there weren't that many good people at the time within Glencore, so they sent me. I was definitely not qualified for the opportunity, but I got sent to Canada to start taking over the business and managing that integration with the assets. And that's when I fell in love, with like truly spending time at operations, mining and smelting. And yeah, I just a great school. It was really a good school. I'm very grateful for that.
Yeah. Well, and with that, Dan, starting in equity capital markets at Morgan Stanley and Sydney, and then making the pretty big shift to Glencore. It's not the typical path, but what was that transition like for you moving from finance and into the physical commodity world?
I was more interested in the physical commodity side of things, and so it was like I was just like a kid in a candy store. Like I just couldn't get enough of it. So I loved it, and then with my time at Glencore, I was just very lucky. I got exposed to a lot of like really good people who sort of took me under their wing because I'm not an engineer or a metallurgist, but I was always very interested in that. I was always quite mathematically inclined, but didn't study that at university. So, but then through my time at Glencore and seeing some people, some of the really good mining engineers and good metallurgists and processing engineers, and they were very kind to me and shared a lot of knowledge and, gave me textbooks and things like that to read. And then I just absorbed everything I could and yeah, just really wonderful. And again, the time in Canada is what sort of led me ultimately to Foran when I was with Glencore, because we tried to buy Foran when I was at Glencore. And that's how I got familiar with the asset so much and sort of saw the potential. It was always just moose pasture when we were looking at it and when we started the company. But yeah, it's been a bit of a whirlwind actually. Yeah.
Well, and with that, Dan, is there a story from your Glencore days that still really sticks with you today?
There's many stories from the clinical days. Um, you know, um, I've got a lot. I'm just trying to think what's PG appropriate. But yeah, no, I got so many,
Yeah.
so many.
Well, and with that, Dan, you were close to, with how close you were to full supply chains and concentrates and smelters and logistics. How did that shape your thinking and in terms of how you view risk?
Um, in terms of how I view risk, I think it really showed me the importance of the primary supply. And so what I mean by primary supply, and that's having access to mine material and mines that are in good jurisdictions. And the other thing what I say is that having mines that have got high profit margins. That was something that was quite became quite apparent because our business is full of cycles and peaks and troughs. And high prices, low prices, and when you can find those assets that are long life but also high profit margins that can maintain and make its way through the low prices, that those are super rare, and that can enable you to do great things. And I think you see that with like some of the great companies like Lundin Mining. They started off, it was a polymetallic, zinc, copper, silver, gold in Sweden, and but it was a long life asset, and that gave them the ability to withstand the tough times, between sort of 2011 and sort of 2021, let's say, that 10 year, and then still build the company as well. And same like Agnico Eagle, they started off Laurent, exact same type of mine, So you look at the great mining companies, and I guess I'm going on a bit of a tangent here. Sorry about that, but coming back to your original question in terms of risk and understanding the supply chains. But when you've got those long life assets with high profit margins in good jurisdictions that have got access to sort of readily available supply chain, like for example, we see what the world's like today with straits being closed and tariffs being put on everywhere. It really impacts the supply chain. So you want to be able to be in a jurisdiction that has got access to supplies from that. So established places, essentially, is what I'm sort of getting
Yeah.
at. And
Yeah. And
that's sort of what it taught me, I'd say.
well, and with that, Dan, with that being said, at what point during that process did you just start thinking, I want to build something myself?
I was away with a good friend of mine, Adam Lundin, and with his late father Lucas, and we were having chat, and they sort of looked at me and said, like, what are you doing? Like, when are you going to start building mines and creating real value? Creating jobs and creating money for your shareholders. And I like it was the funniest thing. And yeah, it's just you have these certain conversations at a point in time in your life, and it changes the whole path of your life. And I think that was when I sort of decided I'm going to go out and try do this and do it on my own. I was also I was very fortunate in the period of life where I was at, because COVID had just happened, and I was traveling between China, Canada, living in Switzerland with Glencore. So I was on the road the entire time, and I hadn't stopped for about 10 years. And I'd just got a girlfriend about a year before. That was the first time I've ever had a girlfriend in my life, who's now my wife. Yeah, when you stop and actually have a bit of time to like get clear and think, and that's when I said, okay, if there was ever a time to go and do this and go, it would be now. So
Yeah. Well,
yeah,
and with that, Dan, I love that having that discussion with Luke. I know Lucas Lundin. I never met him, but he was one of my mining heroes for sure. I loved the motto about no guts, no glory,
yeah,
and it's such a he was obviously one of the best mining entrepreneurs in the world, and his kids are doing an amazing job. So,
Yeah.
with that, you eventually step into Foran and start building toward something real. And now here we are with this Eldorado deal coming together. Walk me through how you thought about this deal and what made it feel right to you.
Um, yeah, I think in terms of like what made it feel right. Well, Foran, the whole philosophy we had when we were starting the company was always like, okay, what we're gonna do here is build the mine. That was always the focus from day one. Um, you often see a lot of sort of junior companies will come out there and not really be prepared to go the full way, and that's to go through permitting, to go through financing, and to go through the build. Because I say those are like the three key risks, and it's very very hard. So we thought, just by doing by definition of doing something that other people don't want to do, you'll create a lot of value. Now, never done a greenfield mine build before, and so I was pretty naive, which I think is actually a good thing because if had I known how hard it would be, I don't know if I would have done it. Um, but the focus is always going to be we want to build something for the long term to maximize value on a risk adjusted basis. So we didn't want to over lever the company or anything like that. But the approach was always to maximize value for shareholders and really, do something where everyone wins. We wanted our First Nations partners to win. We wanted our provincial government, the Saskatchewan party, to win. We wanted the federal government to win. We wanted our people, our employees. That was super, super important to us. We wanted this to be life changing for them and their families as well. And then, most of all, we wanted our equity holders to be rewarded because I think that's something that we forget just how grateful we are to have long term equity holders. And that was the whole philosophy. So, when the partnership with Eldorado came along, we just couldn't believe how much value was in that company that again wasn't really being seen by the market. And I think again, like on a risk adjusted basis, like Eldorado is probably the cheapest company out there in the mining sector. I'm sure there'd be others, but for where they are at, it's a company that has invested billions of dollars into probably one of the greatest, will be one of the greatest mines of all time in Skouries. And you had the entire market focusing on that. And we had gone through this at Foran last year because we had capital overrun, we had supply chains go crazy, and contractors renege when Trump did Liberation Day and installed all these tariffs. We had port strikes in Vancouver, which delayed structural steel. We had airline strikes in Canada, which delayed our labor. We then got hit with a wildfire in the best month of construction in the year. And the market just, for a good 6 months, probably a bit longer, just said, not touching this company. And you could see they were just like, the perceived risk was much greater than the actual risk. So when we started looking at Eldorado, we just saw the same thing, where the perceived risk was so much greater than the actual risk. And we thought, this is a fantastic company they've turned the ship around in such a big way. And what George and Christian and Simon and the entire team have done is truly remarkable. Like, I just could not have more respect for what they've done. It's been a very, very heavy lift. But they have got phenomenal assets. Like their Lamac, Ormac complex in Quebec will easily be a 350,000 ounce producer. And they've got Skouries, which again, as I said earlier, is one of the most phenomenal mines. Olympias as well, that's also phenomenally high grade, producing, already expanding right now as well. And then their Turkish operations with what they've built up in FM Çukurova and Kızıldag is just incredible. So you've got a fantastic company with a fantastic balance sheet. They've got a dividend policy in place right now that just installs even more discipline into the company. They're buying back $100 million, I think, a quarter of shares right now. And we just saw like this is something we want to be a part of. So yeah, I think we were just very lucky. They were looking to grow in Canada, and we wanted to grow as well. And so it was a marriage made in heaven.
Yeah, no, well, and it was brilliantly said, Dan. Like it, Eldorado's profile with regards to all the mines that you just alluded to, long life, high margin, multi-jurisdictional platform. It's very exciting. And as you step into the deputy chair role, what are you most focused on in the near term?
Yeah, I mean, I think really like it's all about supporting management as much as possible and empowering and enabling them to be successful. And so I'll do that in any way, shape, or form that I can. And again, I'm very blessed because I've got really great people to lean back on. As I said, got very close confidants like Jack and Adam Lundin. I've got probably one of the best shareholders and in the history of any company in the world, which is Prem Watts and Fairfax behind us. They are just phenomenal. And then you get to lean on the likes of Pierre Lassonde, also again, massive shareholder and just has been a true mentor to me. Just very very grateful. So I'll lean on them in my new role as the deputy chairman and support the management team for Eldorado to just go out and deliver and take the company to where we think it can all go, which obviously is significantly higher.
Yeah, well, and obviously, Dan, the deal really brings together two very complementary stories. And shifting gears just a little bit, there's a lot of attention right now on AI, electrification, energy infrastructure, but behind all of that, there's copper. And I know copper is close to both our hearts, and you
Yeah.
spent your career close to the metal. How are you thinking about copper demand today?
Yeah, I mean, it's. I think copper is going to be something that I know everyone's like looking at it and quite excited by it, but I think it's going to be something that surprises the whole world in the near future in terms of what the commodity actually does from a price perspective. So, in terms of your question, like in terms of copper demand, I actually don't focus too much on copper demand. And this is something that we sort of learned at Glencore, where we would often zero out demand when we were doing our supply demand balances, and we would just start with supply and focus on supply and look at supply, and that will give you a much better determinant of where the price should go. On a sort of standalone basis, let's say, and then you can adjust for demand. You can even make demand negative, or you can make demand positive, and then start sensitizing from there. And I think when you do that, and even if you had demand being negative, with how supply is depleting and how costly it is to bring on new supply, I think people don't understand just how much of a, I won't say problem, but just how hard it is to actually bring the amount of copper that the world needs and what that will mean for the price. We do a lot of work on this at Foran, and we looked back over the last 100 years actually, and you look at the relationship between the copper price and capital intensity of new supply. And new supply can be from a brownfield or it can be from greenfield, whatever you like. And you typically see that with the copper price will track the capital intensity of that new supply, and where it is at today, as measured in 2025 or 2024 was the last year they actually measured. The capital intensity was around $25,000 to $26,000 a ton, where versus the copper price today of, call it half of that, $12,500 a ton. But what is more remarkable is how quickly that is actually increasing. How much more costly it is to start building these mines because labor is getting more expensive, power is getting more expensive, water is getting harder to find and more expensive to desalinate. Grades are going down, therefore you're moving that much more earth and that much more rock and that much more waste. So uh, I, with where it's tracking, it's not $25,000 a ton. It's more like 35 to $40,000 a ton. And I think if you said to someone the copper price is going to $30,000 a ton or $40,000 a ton, they would say like, oh, I don't know, not necessarily, but they would ask you, well, what about demand? And then you'll say, I don't know. But you just
Yeah.
look at that on a standalone basis. It's quite incredible.
Yeah. Well, and with that, Dan, like, do you think, because I love the fact like that when you kind of walk back and you really focus on the supply, do you think the market fully appreciates how difficult it is to actually bring on new supply?
No, no, definitely not. Like, oh my gosh, no, because equity holders are not getting rewarded for how difficult it actually is, and how much risk it is involved in doing that. That's just by virtue of the fact, like the multiples that these companies trade at. So I think when you start to see these mines to be built and how hard it actually is and how long it takes. The average time for a new copper mine is 26 years. So it's incredible. Like I don't know what has to happen, but but it's really tough.
Well,
Yeah.
it's
I when I
well,
started Foran 5 years ago, I had like really nice brown hair, and now I'm pretty much all grey. A lot more salt and peppers here.
well, it's amazing, Dan. Like I know when I've had Sean Boyd on the show, and he's mentioned to me about how so many mines don't get built like flicking a switch or turning on a tap. It years, and a lot of people, and including uh, governments, they think it can just happen overnight, and it's a lot of labor, it's a lot of capital, and it's a lot of work to get these mines built. So, and when you look out a few years, do you see a really tight copper market forming?
Oh yeah, like insane,
Yeah.
insanely tight. Um, I think people have got sort of peak supply at 2029, but in the models from like Woodmac and others, but again, you just see the constant big mines that are having a lot of issues today, and just how much more costly it is, how much more sustaining capital is needed to just for even certain mines to maintain their throughputs. So I think it's going to come probably a little bit earlier, and I think for the new supply, it's going to take longer than people think.
Yeah.
Um,
And with that, Dan, like with this copper market kind of setting up the way it is, where does McIlvenny Bay fit into the broader picture within Eldorado? Because obviously it's copper, and it's we're starting to see a lot more gold companies focus more on copper.
yeah,
Yeah.
and I think a big reason why gold companies will look for copper as well, is well, for a number of reasons. But I think for me the two main ones, again I could be wrong, but this is what I've observed is you look at companies like typically in gold you wouldn't necessarily have significantly long mine lives like 20, 30, 40 year mine lives. And what I was saying at the beginning of the conversation, when you have those long mine lives that come with multi metals, so polymetallic, or you know what I mean by that, and that you haven't streamed away, so thereby you've got two revenue streams, which again makes you more competitive in the downtimes. I think that is becoming really, really more and more understood and more valued. Um, and you look at what like Evolution Gold, like and Jake
Yep.
Klein and what the team they did. I mean, it's an incredible story, and how they built that company up, and they focused again on not just single gold mines. They look for copper as well because it comes with a beautiful, healthy byproduct, but it gets that long life as well. So I think you're going to start to see a lot more people be sought after that, and that's why when you look at McIlvenna Bay, I mean, just incredible. That's an asset that's going to go for generations. Don't even know how long. But with Eldorado, with what happens now, now McIlvenna Bay is no longer a single asset company. It's part of a six asset. It's very, very strong, absolute free cash flow beast. I think at 2027 run rate, we'll be doing around at today's prices around 2.2 billion US free cash flow after taxes, after capex, everything. So you'll have the capital that's needed to invest back into the asset, and that's where you get the greatest IRRs out of anything. When you've got assets that can scale, and so what I mean by that is that assets that can expand and increase life at the same time, and that's what McIlvenna Bay is. That's why it's such a beautiful mine. So with the transaction with Eldorado, we will now expedite the development of the phase two as well. And we spoke about governments earlier, like with this government in place in Saskatchewan, as well as at the federal level, as well as with what Dawn Farrell's doing at the Major Projects Office. You've got literally the stars all aligning, and we are just so grateful for that. And now that will expedite the phase two of Tesla and Mac Bay together. And the IRR on every ton of that will be well and truly over 100%. So
Wow.
that's incredible.
Yeah,
And
I
then
know. And no, sorry, Dan, go ahead.
no, I was just going to say on just staying with copper and the multi metal assets. That's why when you look at Skouries, going to produce, I think anywhere depending on the year from 30 to 60,000 tons of copper per annum. As well as 140,000 ounces per annum. I mean, it's of gold. Uh, it's an absolute beast. And if
Yeah.
you wanted to value it, on a all-in sustaining cost on a byproduct, it's almost zero because the copper pays for all your sustaining capital for all your opex. So imagine having a gold mine that produced, call it 140, 150,000 ounces with no costs. Like at these prices, it's insane. It's like
One,
$700 million free cash flow.
one, and with that, Dan, like I know you just touched on it, but you made a very yourself and your team made a very deliberate choice to build in Saskatchewan. What gave you the conviction in that region early on?
Um, so I think the government was a huge part of our decision to do what we did, because what we did, like we started Foran in November 2020, and so within that time we permitted the mine, financed the mine, built the mine, as well as made two new discoveries along the way. Now three with the recent Thunder one as well. Now we could only do all those things in parallel. Typically people would wait to do all the permitting, then they would then start doing the detailed engineering, which then means you have to wait for your long lead items, and then you can start looking at doing a full financing, and then you can do the build. We did things in parallel. A big reason for doing that in parallel was because we had such strong support from the government. um, so that was a big factor because we took a little bit more risk, but we felt like that risk was easy to take given the jurisdictional sort of premium that we had with Saskatchewan. The other thing, what I say is that we were also of the view that there was a hell of a lot of upside in the district there, because so where we are in the country, so we're just over the border from Manitoba. Now,
Yeah.
where we are in on the east of us in Manitoba, that's the Flin Flon Greenstone Belt that they've been mining for over 100 years. Have discovered over, I think, like 27 or something mines there. Now, we couldn't understand if the belt continues, why there weren't more mines discovered in Saskatchewan, particularly copper, zinc, gold, silver. And the reason being is that how the formation went was that a lot of the stuff in Manitoba was actually outcropping, so
Yeah.
easier to discover. Uh, in Saskatchewan, it's under a layer of dolomite, a 30-meter thick layer, which means you need to do a hell of a lot of geophysics. And that just hadn't been done before. So we spent a lot of time. We had probably one of the best sort of team of geoscientists and geophysicists in the world, led by a chap called Marcus Tompkinson on the structural geoscience with Roland Hill on geophysics side, and then we had a brilliant woman by the name of Erin Carswell, and then she built this incredible team with guys like Johan and Terry, and I mean I can go on about our team. I'm just so proud of our people. I'm just so grateful for them and what they were able to do with their vision and started using a lot more technology than a typical mining company would. We were able to make these discoveries and grow the resource and grow the district. So
Yeah.
yeah,
No, well, the discoveries that you've yourself and your team have made, Dan, it's incredible. I know the Tesla zone is it's very exciting, and with that, Dan, like how important is jurisdiction today when you're thinking long term, just in general?
I, I think I think jurisdictional premium or risk is probably the most mispriced thing today in mining. It's not the commodity or the discount rates that are used. I think people should use an appropriate discount rate to represent the country of risk. So I'm always of the opinion you should look at the where a country's sovereign bonds trade, the yield of that, and adjust your discount rate accordingly for your investment decision. But you take copper for example. Today over 50% or almost 60% of global copper is in Latin America and Africa. Now some parts are good and some parts are not so good. And then you look, okay, where's copper refined? Well, it's almost 60% today is refined in China. Um, and again, some part would be okay with that and some not. So it's very hard thing to actually assess and truly quantify, and it's because these things are fixed assets in the ground, and then you need to take so long, like not a few years, this is decades. So it's something that I think is very misunderstood in today's sort of world. So, sorry, I'm not giving you the clearest
No, no,
answer.
it's good, Dan, because like that, it's a very it's so true about how jurisdictional and that applying that discount rate is very important because we've seen numerous examples that we won't get into of being you can have a beautiful mind but in the wrong jurisdiction and you can see what happens. So it's an
Yeah,
excellent point. And with that, Dan, like with McIlvenna Bay approaching completion, getting a project this far, as you mentioned, like when you started, you had more color in your hair, and now
yeah.
it's white. It's not easy building a mine. What were some of the key decisions that helped keep things on track during the build?
Um, there's so many, but I say so many key decisions. I say there's so many. Look, things go wrong every single day. Like I'm not going to pretend and say, oh, this is okay. It's all going well. Like anytime anyone says that, I think they maybe not necessarily um, um, or anyway, I think the point is that it's very very difficult to do this. I think for why we've been successful, um, I think it all comes down to people. All comes down to your team. That's the biggest thing, and having the right people. We we got G Mining Services to come in and integrate into our company to build this with us. Um, I don't think it could have been possible without them, to be very honest. There's a reason why they have the reputation they do for being the best in the world. That's because winners win, and they find a way to make it happen. But and then with the rest of the team at Foran have just been incredible. Like again, I just can't speak enough or highly enough about them. Like Gil Marsh, our COO, Sam Ranelli, Ryan Newing, our GM. I mean, it's just we've just built such a world class team,
Yeah.
and I'm just very 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 proud and yeah
Well,
I get a bit emotional about my team. Love.
no, of course, Dan, and rightfully so. I remember I wrote an article way back in the mining.com of the early days of the LaRon build.
Yeah,
And these mines it's extraordinarily hard to get them into production. And once they're in production, they turn into multi-generational assets. But to get them there, it's a
yeah.
journey.
Oh man.
It's a big journey. So, and with that, Dan, what should people be watching over the next few months and especially the next few months as we move toward, or as Foran moves towards production?
Well, I think so. I think it's going to be an incredible time. So I think the transaction with Foran and Eldorado will close tomorrow on the 14th of April, and then you'll start to see first production within the next few weeks. I mean, we've already got ore going through the mill right now, so the commissioning's underway and going very very well. So you'll see the first production, and then soon after that, commercial production by middle of the year, and then you'll see Squirries shortly after that with their first production coming sort of in the second half of this year, and then moving to commercial production. So I just think it couldn't be a more compelling story. I'm just so excited about it. It's
Well, and with that, Dan, as this all comes together, the metal mix becomes super interesting, especially across the platform. Obviously, the Gold Telegraph audience
oh
cares
yeah.
very deeply about gold and how it's always played a unique role in markets. And how do you think about gold within this broader gold copper story?
Yeah, I never thought I'd become a gold bug, but like I am fascinated. I'm like, so my wife, she, the only books I can read, like, I don't know why. I mean, I really struggle, but the only thing I can read is like a book about mining. Like, just give me a mining book and I'm in heaven. And, so, but like now I'm reading all these books about gold and the history of gold, and it is fascinating. And you really understood I was looking at something the other day. There's been 189 fiat currencies in our time, and gold has outperformed and withstood all of them. Uh, and then I see like sort of gold as a hedge against uncertainty, and I think there's no shortage of that today.
When
Um,
it when it's so interesting, Dan, it's so true about, like, even when you study different empires throughout history,
yeah,
Spanish, the British, the Roman Empire, gold has always stood the test of time, and even I always find it fascinating. Even pre 1971, gold was always linked directly into the monetary system. So
yeah.
it's and I coming, for yourself, coming from the base metals world your entire career, what stood out to you about gold as an asset as you started really immersing yourself into the reading of the history?
I think. I mean, there's so many things, but the big thing that I think like what's really I've been doing a lot of work and just understanding the history of like gold and trying to understand the relationships gold has between real rates and the things like that. Particularly recently, because with the recent events with the war in Iran, and everyone's saying, well, inflation's now coming, and so real rates are going to go up, and then gold's going to go down. And I was a bit confused by that, and I started looking back, and that whole relationship has really broken down. That actually broke down in probably 2022. And then you start looking at like, why did that relationship break down? Like, and when you look at it, it's very fascinating, because now you start to get into the whole sort of global financial and monetary flows in the world, and what's been happening with these central banks buying, and these BRIC nations buying gold. And then you understand, like, why are they doing this? Well, they're doing this because their currencies need to be backed by something, and
Yeah,
everyone chooses gold.
yeah.
And that's what's happening. And you're starting to see more transactions around the world move away from Swift and to other BRICS ones, and China denominated ones, and other currencies again, but they're all backed by gold. So there is the de-dollarization is a real thing. And so when I started looking and understanding more of that on the macro side of things, it really is quite fascinating. Um, so yeah, I'm just really enjoying becoming a gold bug. But the more I read about it, the more I get into it. So I have to always keep trying to check myself.
Well, Dan, I have to say, I know the entire gold industry. We welcome you being a gold bug, because
Yeah, thank you.
we need we need more influential gold bugs, and I think naturally it's gold, with the role it's playing in today's world, it's definitely it's becoming a neutral reserve asset, and even for it to surpass U.S. Treasuries and central bank reserves, it's a testament to how important it is. I know with our both your friend and my friend Pierre Lasson a couple weeks ago made it very clear how gold is becoming a central component of the financial architecture globally,
Yeah,
and it's really it's phenomenal to see. It's funny, Dan. When I started I guess over 10 years ago, talking about gold, I was always branded as a bit of a sensationalist and all that, but I was always just trying to educate the world on the importance of gold, of being
yeah.
a neutral reserve asset, and with that, with in a world that's becoming more and more uncertain, whether it's geopolitically or the weaponization in some capacity with the financial system. Why do you think gold continues to matter? Is it the history of it being a very strong proof of store of value?
I don't think it's just that, man. I really do believe that. What I think Pierre said it a lot better than I can, and you just repeated that in terms of how the role that it's having in the changing financial architecture of the world. But really, I see that all being linked to the not necessarily de-dollarization, but an emergence of more alternatives to the dollar, and whether that be BRICS nations, whether it be other currencies that are not BRICS nations, but everyone is seeming, all the central banks are seeming to understand the need to hold gold versus a U.S. Treasury, which is changing the game entirely. And I think I really do believe that's going to be a huge impact on gold and the gold price.
Yeah. And with that, Dan, it's I've always viewed gold as like you have stability on one side, and then with copper you have growth on the other. And
Yeah.
when you step back and you look ahead a few years, especially with Eldorado, what excites you the most about where things are going, especially with that copper gold blend
Yeah,
in terms of the platform?
I mean, again, I'm a bit biased, but I don't think you could have a better metal mix than the company does today. Like, to just be, such a big gold and copper producer, and just with once McIlvenna Bay and screws come online, like on a gold equivalent basis, this is going to be almost 870 to 900,000 ounces. So it's becoming a very, very big player. But it's also going to become a really good copper producer as we expand McIlvenna Bay and Tesla. We look and grow in Greece with some of the copper gold skarns and porphyries that they've discovered there near Stratoni looks incredible. So I think the company is just. I honestly don't see like a better positioned company for today's day and age. And the other thing is like, this growth that they've got is not like growth in a long time. And I always say like not all production is equal and not all growth is equal.
Yeah.
They've gone through hell. They've gone through the Lassonde curve, and McIlvenna Bay is just starting to come out. Skouries is still there, and it's about to start coming on the uptrend as well. And like they've invested billions and billions of dollars there. So I think to have that immediate growth, that 80% growth in your production, but the incredible growth in your free cash flow, what I think is more important. I just I'm just so excited. I've got pretty much 99% of my net wealth is in foreign. I'm putting it all into Eldorado, and yeah, I'm just very, very motivated and keen to make the whole thing a massive success. So
And with that, Dan, once everything is up and running, and especially with the other developments in the pipeline, how do you think about the cash flow potential in the years ahead?
I mean, it's insane. Like, well, as I said, so within the next 6 months, we'll be up and running and doing. Well, maybe call it 9 months. You'll be up and running and at a run rate of around 2.1 to 2.2 billion dollars US per annum free cash flow, which means you're trading at roughly 4 times cash flow, which I think is unbelievable, or a 23 or 24% free cash flow yield, is quite insane. So, with that, I think we'll just continue to just buy back our shares while we're trading at these insane cheap levels. There's probably no better buyer than your own stock, and we'll do that, and then maintain the dividend, and then once the free cash flow yield improves, then you start just and you increase your dividends or your special dividends. But the idea is to sort of maximize the value for your shareholders and reward your equity holders. And yeah, we will look. I mean, the next project in the portfolio, we're doing the Lamarck expansion and the McIlvenna Bay expansion as well. But the next standalone is Parama Hill, and I think, I don't know how familiar you are with Parama Hill, but I've never seen an open pit heap leach that outcrops. Essentially, it's like it like looks like this. The deposit is outcropping, and it's got a 0.3 strip ratio because of the way that it like outcrops, and it's 3 grams per ton gold. Like, I mean, I've never seen anything like that. Like, if that was a standalone company, it'd be worth $2 to $3 billion easy. Um, so yeah, very, very. There's just so much. So we'll develop that, and I just think just again, I'm just so excited. The more I look at them, the more I just get like so pumped.
One, and Dan, I really appreciate your time. I know things are crazy busy on your end, you and your team. And one last question for you, for people watching this, investors, people trying to understand the space better. What's one thing that they should keep in mind right now?
Ooh, good question. Very, very good question. I think one thing people should keep in mind: free cash flow yield. Just free cash. I'm a big believer in, you look at things on free cash flow yield is the best way to value things. So I would always keep that in mind. Um, what else? I think there's a lot of opportunity right now. I really do. I think particularly in the gold space, I see just an incredible amount of opportunity with what the market's done in the last few weeks with the war in Iran. Um, if anything, it's made the investment case even more compelling. So if you can, I think it was Edo Thorpe, the great investor, who said, don't be a scared rabbit, and just hold firm.
Yeah.
Yeah.
One, and with that, Dan, I really appreciate the conversation. I'm excited. I think we're going to do this is one of many over the in the
I hope
years
so.
ahead.
Yeah.
So I really appreciate your time. So thank you very much, Dan.
No, thank you. Oh, I feel like I learned a lot about from you, and I learned so much from your show. I've probably rewatched the last one you did with Pierre Lassonde about 3 times. So thank you again, and please keep doing what you do. It takes a lot of work, and we're all very, very grateful for it.
Thank you, Dan.